This is Ed Czerwien with the USDA in Amarillo, Texas, with the weekly box beef recap for week ending May 18th. The comprehensive choice cutout, which is the weekly average of all types of sales, including the spot trade, formula trade, and export sales and outfront sales, was at 204.17, which was $3.42 higher than the previous week. The total reported box beef volume was 7,306 loads, which was 712 loads more than the previous week. 4 weeks out of the last 5 have been over 7,200 loads, which has put us much, much closer to last year's numbers. Obviously, there was pent-up demand and good follow-through buying as retailers prepared for the grilling season. The formula trade was 3,496 loads for the week, which was 288 loads more than last week and about 48% of the total sales. The major part of the total increase in loads was due to the outfront sales, which were 1,624 loads and were 591 loads higher than the previous week. This means buyers were booking product now for June and the 4th of July because sales don't register in this category unless they are beyond 22 days for deliveries. Apparently, buyers decided they were not going to wait and get caught short but want product booked for early summer, which is traditionally the best grilling time. When you look at the graph, which compares this year's outfront sales to previous years, you will see that we have not really exceeded previous years. There are always extreme spikes in outfront sales for the major grilling holidays each and every year at the same time. In fact, on the second graph, I have added the 2010 year, which was a time of very, very large outfront bookings when meat buyers were extremely aggressive for those outfront sales. The other factor to consider are that those prices for those outfront bookings were lower than the spot market for loin and rib products, which had skyrocketed lately. Also, the major outfront bookings were brisket and round products, which totaled over 7 million pounds and have not increased much in price the past few weeks. In fact, those outfront prices were roughly the same or weaker than the spot trade. Exports reported 955 loads, which were 181 loads more than the previous week. The NAFTA exports represented 357 of those loads, and 598 loads were shipped overseas. Now we can compare the comprehensive choice prices to the daily spot choice box beef cutout, which we watch each and every day, and it ended the week setting a new all-time record high again on Friday at 209.51, which was $4.53 higher, but on very light trade once again, with only 727 loads for the week as reported in that daily cutout. That makes 3 weeks in a row with weekly spot load counts in the 700 range out of about 7,000 total loads sold each and every week. The most recent 10-week rolling box beef sales average was 6,954 loads per week, which compares to 7,229 loads per week last year at the same time, and was only 275 loads less than last year's average. This is an extremely important number since not only is it the closest that we have seen or been to last year, but we have also cut our harvest rates and don't have as many loads to sell as we did last year. So it's a lot closer than it looks. Steer and heifer slaughter has been reduced, but weights continue to be modestly above last year. The latest average national steer carcass weight had been following the normal seasonal decline and was 1 pound lower at 839 pounds, and that compares to 832 last year and 814 pounds for the 4-year average. The Choice Select spread continues to widen as retailers pursue more choice product for the grilling season, and it was up to about $17.20 by Friday, which was about $3.40 higher than the previous week. We are starting to harvest calf feds, which traditionally don't grade near as high a percent choice this early in the season, and that also contributes to a wider spread in that Choice Select spread. Thank you. This has been Ed Czerwien with the USDA in Amarillo, Texas.